Hi guys, I'm Navin from Singapore Commercial Space. We specialize in commercial real estate in Singapore, which comprises of shop houses, offices, industrial and hotel segments. Today, in this video, we are going to talk about how to buy commercial real estate in Singapore. So, the rules for buying commercial real estate in Singapore, there is no difference of stamp duty whether you are a Singaporean, you are a PR or a foreigner. The stamp duty is simple, it's 3%. 3% for everyone, and there is no rule like first property you have to pay additional, second or not. This all same, it's all 3%. The only rules which we are going to talk about is that some of the properties, or I will say majority of the properties, especially if you're buying from a developer, they attract GST. Current rate of GST is 7%. So I give you on numbers front what happens. Let's say you buy a commercial real estate of $1 million. You have to pay two things. You pay 3% stamp duty as well as 7% GST. That's why most people, when they buy commercial real estate, they buy the real estate through a company. You can get a company GST registered, and then you can go for GST claim back from IRS. Now that is something which your accountant will tell you how to do that. But then if you are buying under a GST registered company, you can claim back the GST. But if you are buying a GST registered property under your personal name, it's very hard to claim back the GST because a person may not be GST registered. Majority of the cases, it's very hard to get GST registration for an individual. Generally, GST registrations are given for a company. Let me explain you the process of buying commercial real estate in Singapore. So a lot of people have different views of how to buy commercial real estate, but what is more important is the seller. If the seller is GST registered, whether he's owning an asset under his company or under his personal name, and if the seller is GST registered, then the buyer who buys, whether you buy under a personal name or a company name, you have to pay GST. So it is not on the asset, it is on the seller. The seller owning the asset, if he's owning the asset under a company, is GST registered. Then as a buyer, you have to pay GST. Now what you can do to save your GST component is, you can buy it under a company and get the company GST registered. I'm sure you will find an accountant to help you with that. The process will be much more easier for you to claim back the GST. But let's say you buy an asset where the seller is GST registered and you buy it under personal name, then to claim back that 7% GST may not be possible. So one of the most important aspects of buying commercial real estate is you always check whether the seller is GST registered or not. And then you make your choice how you want to buy an asset. You want to buy an asset under a company, or you want to buy an asset under personal name. My personal suggestion is always buy commercial real estate in a company, whether the seller is GST registered or not. It has its own merits. First of all, business income as a commercial real estate, your rental, that can be covered. Plus the income you earn from the commercial rental will not be added to your personal income. It will go to a company, and it will be much more easier to manage companies if you're trying to increase your portfolio and increase. And GST is a good thing because in future, if you want to buy 2 or 3 assets, that company can be used to buy multiple assets in the future. Like one of the most, any developer selling commercial real estate has to be GST registered because all developers are GST registered. So you can't buy a commercial real estate from a developer without GST. So it is always advisable to get GST. The other thing which is most important is, other than the GST and the tax pact, is look, if you're buying for own use, you check what use is possible or not. Let me give you an example. Somebody bought a shop house thinking that he can use the ground floor as his office. They wanted a family office. They wanted to use the ground floor as an office space. But then they realized that the ground floor is under F&B. That area was, I think, Ansiang Hill. And then it's very hard for URA to actually change the F&B space to an office space because they want to rejuvenate the Ansiang Hill, and they may not give you permission to convert a F&B space to an office space. So it is very important that you know what is the usage approval for that particular asset you buy. Another example would be an office segment. I remember very clearly a few years back, somebody called me and said, hey, You have an office unit at International Plaza. Can I open a chamber there? I say, what do you mean by chamber? You say, oh, I'm a dentist. I want to open my practice in International Plaza. Now, a dentist cannot use an office space. International Plaza specifically, first there is no water point, then there is no permission for a dentist to open his practice in International Plaza. So you have to check these few issues, that what you are buying actually is allowed for your trade or not. And that's why if you use an experienced commercial agent who understands these things, he will be able to take you through these steps very, very clearly. And you don't have to go through those much troubles. One of the other aspects which is very important is that always check what is the lease of a commercial property. A lot of commercial real estate may have 30-year leases, 60-year leases, 99-year leases. It is important to get your bank loans. If the property is below a certain age, the bank may not approve your loan. Or in the future, if you want to exit the asset and the lease period is very, very small, you may not be able to exit the asset. So I want to sum up what I just sold. Make sure the GST component, the usage of the property, as well as the lease period of the property. Make sure you know these three things before you buy a commercial property in Singapore. I'm Navin Bafna from Singapore Commercial Space. Thanks for watching. See you in the next video.